Okay, folks, I'm going to give you a trading exercise, and this is something I did to become more consistent as a day trader. And if you put the time in doing this, I promise you, there's very few things I'm going to promise, but this is one thing I can promise. Your understanding about what the market's going to do on an intraday basis a few times a week will drastically improve. Now, does that mean profitability? No, because I cannot promise you profitability. I am promising you a greater understanding of what price action is going to most likely do a few times a week, and that's all you need to do very, very well in speculation. So, if I can take your attention back to the concept I gave you in terms of using the daily chart, whenever we see a swing high, and this is what was tweeted this evening on my Twitter account, the swing high here, we have a high with a lower high to the left of it and a lower high to the right of it. Okay, once that takes place, we start looking for the lows to be violated, and every time you see the previous day's low, that's an opportunity for a trade. Now, it's a scalping tactic. That means 20, 30 pips just about every day. This gives you a setup. Now, it does not give you a setup every single day in the same pair. Now, it can be multiple examples of it in the same pair, but what I stated was it can give you a setup every single trading day, because some pair across all the universal pairs that's available to us in Forex, one of them is going to provide this. Now, the chances of you being in it may or may not be there, okay? But if you follow one pair, at most two pairs, you will have something to work with every single trading day. It does not mean to execute live funds. It just means that you can practice with it. Do not discount this exercise if you're looking at it on the basis of it's only hindsight, because some of you are not going to be able to do this live because you're under a job or your life circumstances don't permit the opportunity for you to sit in front of the charts and do it. But go back through the charts in an end of day capacity and look and see if what I'm teaching you here tonight is in fact what goes on every single trading day. Okay, so I want to go back to this reference point here. This is where a swing high is formed. Price starts taking down each individual daily low is violated until we get down to here. Then price reacts, trades up. Now this run here is like a railroad track type pattern. And I probably should have never included that in the presentation because it's going to make it seem like I'm a follower of just candlestick patterns. But just understand that this pattern here did not take out this swing high. Okay, and as soon as we traded below this candle's low right here, comes in at 117.63. This is Sunday's trading, and then today's trading on Monday. The market opens up, it rallies up. Forget about getting the high there. It's not necessary. We're focusing primarily on the New York session. And what we're going to be doing is we're going to be looking for where the market may reach for. Well, we've already taken out Sunday's low. We've already taken out Friday's low. So what would be the next objective? This low right here. So that's our mark, okay, or target. So if we think in terms of being a sniper, this is what we're going to be targeting, okay, this old low. Now, why am I saying that this is a target? Well, think about it in terms of support and resistance. Price in itself showed a willingness to rally from that level. So we could probably see it come back down to that level again, and maybe it might bounce, or maybe it'll go through it. No one absolutely knows this. But if price is above it, if price is above that low, and it's also bearish, then we could look for that low to be traded to as a minimum objective. So how much of a range that allows us is always going to be largely dependent upon individual unique setups. The larger of the ranges, the better the setup. So I'm going to give you a exercise, and we're going to map this out here with this particular chart. I'm going to maximize it, and we're going to go into a 15-minute time frame. And what I want you to do is I want you to think about how price was reaching for that level down here. It's 117.29. That's what that is right there. Okay, that's that old daily low or target, or as I refer to it as the mark, okay, as a sniper. So we're looking for that low to be retested, and in this case it went through it just a little bit, and that's fine. It could have very easily just stopped right before hitting it, and that would have been just as well. It doesn't have to always go through it. Now admittedly, I thought that we could possibly go through that as an objective today, and I was allowing the trade that I took to potentially pay that out to me should it yield that much of a move below it, but it didn't, and I actually fell asleep and didn't even have myself alert at the time to take off something at the market. Okay, I had to collapse a portion of it once it had come back above the low over here. Allowed me to get right at the first objective in our fib for scaling, but other than that, that was the best I could do. And here it is. So you can see I'm human. But I want you to look at how every day, if we're expecting bearishness, okay, if we're expecting lower prices, what I want you to do is every day that you're bearish, right before 7 o'clock in the morning, New York time, okay, I want you to kind of like take a look at what the market's doing. If you're bearish, and we'll say that we were bearish here on Friday, okay, now in this regard, I'm speaking specifically in light of hindsight only, okay, so I have to tell you that just because I'm talking about in hindsight here doesn't mean it's going to be as it is in this chart, but it's going to be very close to it in theme. Okay, it's going to have a lot of similarities to it, and you'll see what I mean by that in a minute. Okay, what I've done is I've added 7 o'clock in the morning by a vertical line here on each respective trading day in the last few days, and also noted the previous day's lows. So now all I'm going to do is remove the vertical line delineations that's seen in the chart and only leave the 7 o'clock in the morning New York time reference points. All right, so now what we have here is we have Sunday's trading in here, Friday's low right in here, and then here's Thursday's trading over here. So we're going to look at what we have in terms of a drill or exercise we can do every single trading day. But you have to first know what you're looking for in terms of bias. Now, it doesn't mean you're going to be right every day. It just means that you have to work in this framework. Know what is most likely going to be the directional bias today based on what the daily chart's showing. Is it going to be running the lows or is it going to be running the highs? If we are bearish, and we're going to assume that today we were bearish, and for folks that are in my mentorship group, we had already mapped out a probable scenario in terms of my commentary with them. So they know that this was the most likely scenario going forward for Euro, at least using my concepts. But most of you that are watching don't have that availability. So I'm going to give you a very simple approach using what we have already arrived at since I've been back on social media and YouTube. The element of looking for optimal trade entries in a day. Okay, and when we're bearish, I want you to focus on 7 o'clock in the morning. Let me take the day dividers off now so that way we can focus primarily on 7 o'clock in the morning each individual trading day. So here's Friday's trading in here. Okay, and Friday's trading, I want you to notice we came back up to this low right here today, intraday. Now, this level many times would not be even considered with standard support and resistance ideas. But this level here is important because it's a swing high and a swing low. And we mentioned in the Went series, what every new and aspiring forex trader wants to know, we have to use these reference points because they may end up becoming reused in the future. Okay, so I also want to, again, let's add the dividers again. You can see that this is Friday's daily low. Here's Sunday's trading. We made a lower low on Sunday, and then we started trading on Monday higher. And take that back off. And we had a little bit of a gap in here, and you'll learn about that. That's this is whiplash and then catapult. Okay, very simple little pattern for Sunday. I don't trade it anymore. It's nice to see when it occurs, but it's not that big of a deal. But I want you to see how at 7 o'clock in the morning on this MT4 platform, this demo account, 1100 is 7 o'clock in the morning New York time. I want you at that moment, wake up, check your charts. You can do it on your smartphone. And if you're bearish, you're going to be looking for price to rally up at least 20 pips or more. Okay. If it does this and you're bearish, then what you want to do is you want to anchor a previous high to the low prior to that 7 o'clock in the morning rally up at least 20 pips. Okay. When you see that, start hunting optimal trade entry shorts. In this case, we can zoom in a little bit. Here's 7 o'clock in the morning today, Monday, October 23rd, 2017. The market shows an initial decline. We're not looking for that. We want to see it start to rally up 20 pips. What is it doing? It's retracing intraday on a day that's primarily bearish. And the high was set during what? What time of day is this? It's exactly 2 o'clock in the morning New York time. What did I say in my videos regarding high of the day? Here's Monday's trading. It trades up, creates the very high of the day between 2 o'clock and 4 o'clock in the morning New York time. That's the high of today. It trades down after 7 o'clock in the morning. You want to see a rally up of 20 pips or more, but not take out the London high. Okay, it has to get close proximity to the high, but only up to 79% retracement level. So if we look at that, we can see that relationship between the open down to the lowest body candle right here prior to this rally up. Now this is equal. This open and this close is equal at 117.35. But price trades right back up to the 70.5 level, and it's also Friday's old low with a swing low. So there's a confluence of things happening right there. Now, if you were to use the wicks, I just want to throw this in here for completeness sake. I don't advise doing this, but for comparison, you can do this and see we still get exactly right to the 70.5 level. Precision. Okay. Now, I don't require that for entries. I'll allow myself to use the bodies of the candles, and it'll get me close enough. But if you want to be a nutcase about precision, you can get that surgical with it. Okay. You're going to miss some setups because your orders won't get filled, and that's going to be problematic for you. But that's the reason why I use the bulk of the volume with the bodies. Okay. So again, 7 o'clock in the morning, which is in my platform here for my demo, it's 1100. So when it rallies up 20 pips, well, we have 1735. So that would mean you have to go up to at least 1755. It does that here, and it does it here. It has to do that and find an overlapping of optimal trade entry, which it does here. So at least 62% retracement level and a 20 pip rally after 7 o'clock in the morning New York time in a bearish day, anchored to the London high, optimal trade entry short. What are you targeting? Intraday low, and then the next daily low. Okay, and you can see, as I showed on the video earlier, 117.25 gets us really close to that level. The actual low here on this platform, I get to pop up here. Low comes in at 117.25. This fib takes us down to like 117.24. And just for completeness sake, I'll put this back up here like that and down here like that. So if it's on the wicks, we are really far away in that target then. But using the bodies, it gets us much closer to the objectives that I outlined just now. Now, everything I just said here, you would reverse when it's bullish. You would expect a retracement lower after 7 o'clock in the morning and expect that run higher. And again, this is a scalping technique. It's for something like a 20, 30 pip type move intraday a couple times a week, but that's all you need. Remember, 23 pips, risking 2% of your account, can make a double of your account, or basically double your account over the course of a year. So hopefully you found this insightful. Until next time, I wish you good luck and good trading.